Thank you, Florence, and welcome to our audience and our panelists for the first session today. My name is Nikhil Markanday. I'm a partner in the London office of King & Spalding, and I specialise in energy and infrastructure finance transactions. For almost the last 20 years, I've worked extensively on these transactions, predominantly in Africa and other emerging market countries, and a significant amount of my transactions have involved development finance, whether working with DFIs or multilateral agencies. This webinar is entitled Africa's New Partnership with DFIs and is set, as with the rest of our webinar series, against the backdrop of the COVID pandemic. Shortly, I will hand over to Dana Bennett, who is the head of the Management Secretariat of the IFC, and pleased to say my co-moderator in today's session, to introduce our panelists. But before that, perhaps just some introductory remarks. COVID-19 is forcing Africa to grapple with multiple crises that overlap. There's the pandemic itself, a wider economic crisis that is exacerbated by low commodity prices, reduction in trade, travel, and reduced capital flows. There's a food security crisis. And as Africa grapples with this new reality, one of the things that is clear when looking at the short, medium, and even long term is that the role of the DFIs and related trade and financial institutions could not be more important. So today we're going to hear from some of these institutions on a range of topics, including their activities to date in responding to the pandemic, themes of collaboration amongst these institutions, and then looking ahead to the medium and longer term and how these institutions can help create a more resilient Africa, capable of being better equipped to withstand future shock events in the future. And so with that, I will hand over to Dana to introduce our panelists.
Thank you, Nikhil. Good morning and good afternoon, everyone. I would also like to welcome you to our panel discussion. My name is Dana Bennett, and I'm a Senior Operations Officer at the International Finance Corporation, which is the private sector side of the World Bank. Like the DFIs represented here today, IFC has been focused on achieving greater development impact, particularly in sub-Saharan Africa and South Asia, which account for the majority of the world's impoverished people. This is such a critical moment globally, as Nikhil said, both for the continent of Africa, which is our focus today. And for 25 years, extreme poverty was steadily declining. And now we have this moment due to COVID-19, but also conflicts and climate change that is creating a major setback in that effort. So according to the World Bank, the increase in extreme poverty from 2019 to 2020 is projected to be larger than any time since the bank started tracking poverty in a consistent manner. So the work of DFIs is even more urgent given this tremendous erosion of progress. So with this context, and a big thank you to King & Spalding for providing this forum, I'm really looking forward to today's discussion on Africa's new partnership with DFIs and to talk about how the DFIs represented by our panel are addressing current challenges and looking towards building back better and creating more resilient and robust markets. So with that, let me introduce our panel members. We are joined today by Kimberly Heimert, who is the General Counsel of Africa 50, Mark Kenderdine Davies, Chief Legal Officer at the CDC Group, Samali Chiinji, General Counsel of the African Export-Import Bank, and Kevin Turner, Vice President and General Counsel of the U.S. International Development Finance Corporation. So thank you to everyone for being here. And let's dive right into our first question to the panel. How are your institutions engaged with the private sector across the continent in the wave of COVID-19 right now? Maybe I can call on Kevin to respond first.
Sure, great, thank you. And let me first just thank again King & Spalding for putting together this great panel and all these sessions. I think pride yourselves on this important topic, and it's a privilege to be here. Here at the DFC, which is a new DFI in the United States, about a year in existence, that came about through the merger of formerly OPIC, Overseas Private Investment Corporation, and part of USAID. Africa has been a priority. It was a priority for us before COVID. and it certainly is continued to be a priority during COVID and will be afterwards. Our current portfolio is about $8 billion spread across 300 projects in Africa. And we have only leaned in during this COVID period into the continent. For example, our last quarter ending in September was the largest quarter for DFC and OPIC in history, with $3.6 billion of new approvals. Roughly $2 billion of that is in Africa. And just a few highlights of what we're doing just in the last quarter was $1.7 billion into Mozambique for energy and power projects. DFC has new equity authority, which OPIC did not have. And two of our first equity deals were in Africa. We did a deal in Rwanda and a deal in Kenya. Both of those e-commerce platforms that serve personal care and healthcare for consumers. So really excited about those projects and how they directly relate to COVID response. A $250 million Tier 2 capital facility for Africa Finance Corporation, and then a host of SME and microfinance transactions. So we've really leaned in, and as I said, even during the pandemic, when everyone is working remotely, doing due diligence remotely, it's been obviously a new challenge, but we've been able to move full steam ahead. We've launched an investment advisor program in Africa, meaning that DFC has staff on the ground now throughout Africa. We started this during the pandemic. We're continuing our whole of USG approach through Prosper Africa and Connect Africa and Power Africa. And then we have set up a liquidity facility for existing projects to help those folks that we've already dealt with, our existing clients that need access to more capital for their projects. So that's just a few of the highlights as we've worked really hard and continue to help with projects in Africa.
Thanks, Kevin. Semele, could we hear from you?
Thank you, and thank you again for the invitation to speak on the panel. I'm the General Counsel of the African Export-Import Bank, and we are a multilateral development finance institution headquartered in Cairo, but working across the continent. We have 50 member states. And just to say, I'm glad to be on a panel with so many other Ugandans. I'm Ugandan by birth as well. And on to your question in terms of what we've been doing with the private sector. Interestingly, the African Export-Import Bank was an institution created by African governments to help the private sector. It was established in the 90s at a time when there was a commodity downturn and many African institutions just couldn't get trade lines. And that really was the genesis of the bank. So it's in times like this that we were actually designed to respond. And what we did as an institution is we engaged with, we serve both sovereigns and the private sector, but we engaged our stakeholders early. So before any of the major lockdowns, we started having very frank and honest conversations, particularly with our private sector clients. And out of that, we were able to develop some very bespoke products that we were then, when things did escalate, able to roll out quite quickly. And one of those products was what we call, the abbreviated form, it's called a PATIMFA, because it's got quite a long name. It's the Pandemic Trade Impact Mitigation Facility, which is really a program of sorts where we had a two-pronged approach. The first is, how do we give businesses lifelines? And the second approach was, how do we help both sovereigns and the private sector access medical supplies, but also critical food supplies that they'll need during this crisis? Because we're in October now, but if you recall at the beginning, everyone was scrambling to get PPE. And in this environment, particularly where you have a continent that doesn't manufacture as much as other continents, that doesn't trade as much with itself compared to other continents, Africa was at a real disadvantage. And so one of the things we did was try and think about, well, how do we address that, as well as addressing the financing needs that our corporates were having. As mentioned by Kevin, because of liquidity. We could see what was coming in the future. And so that's one of the key products that we deployed into the market. And we did it in a manner, because we had spoken to our clients quite early, we were able to deploy things in a much shorter time frame than our normal processes, without at all compromising our due diligence.
Okay, thank you. Kimberly.
Thank you. And as my fellow panelists have said, thank you very much to King & Spalding for organizing this, excuse me, and inviting me to participate. At Africa 50, we are a bit of a unique DFI in that we focus on equity and equity investments and development. So we have two arms, two windows, so to speak. One is Africa 50 project development, where we work on very, very early stage deals to help to fund with future equity, help to fund development costs to get projects to a point of being bankable. So obviously that can take many years sometimes. One deal that we've been working on for a while that has gotten a fair amount of press is the Congo River Bridge deal that will link the two capitals, the two Congos and the two capitals. It is something that we've been working on since I arrived here almost 3 years ago, and we anticipate it's still a good year away or so. So that is one arm. The other arm that we have is project finance, where we invest equity. We invest our shareholders' equity into projects. Overall, we focus on infrastructure, typically hard infrastructure, so power, transport, ICT, midstream gas, and obviously with COVID, we are now starting to look at healthcare as well. And then we mobilize, the third arm is we mobilize public and private sector financing for infrastructure projects. And we're looking at a variety of ways to mobilize more private sector financing, equity financing. So, and we do only private sector deals. I mean, obviously in the development stage, often there are countries, there are sovereigns involved, and we work very closely with sovereigns in developing projects. But the projects, the investments that we make are in deals that are sponsored by, run by the private sector. So as others have said, we have really leaned in to the private sector very heavily since March. Primarily in connection with our portfolio projects to help them manage this extremely difficult situation. Some of our portfolio projects are in construction, some of them are already operational, and we are working very closely with them and lending them our expertise and lending them our networks to help them through this difficult period of time, looking at details such as when does it make sense to declare a force majeure? When does it not make sense to declare a force majeure? How can they manage their cash flows to ensure that they're still able to operate? We have really generally followed the lead of sponsors because obviously each sponsor has their own risk appetite with respect to deals. And so we haven't been pushing sponsors to do things that they're not comfortable with doing, but some sponsors have been very happy to continue pretty aggressively pursuing, developing, constructing the deals that we're working on. And so it has been a very interesting exchange with the sponsors that we work with, the private sector that we work with. I will say that one thing that we have leaned away from is our exits. We had been sort of thinking about and starting to market some of the portfolio assets that we have for exits, but we have determined that the risk premiums have gone up pretty significantly. And so we're happy to sit and continue to hold assets that we think are really good assets for a price that we think will be better moving forward. And then finally, we've been engaging with the private sector as well as with sovereigns about what kind of projects should we start focusing on to help with the resilience of the continent for future events like COVID. Because I think that many of us believe that events such as COVID, if not a pandemic, then as Donna mentioned, climate change, et cetera, are inevitable. And so we really want to work with them to sort of look around the corners of the future to help the continent be more prepared and more resilient when those things do occur in the future.
Thank you, Kimberly. We'll definitely pick up on that later in the discussion. And let's let Mark round out this question before we pass to the next one. Thanks very much.
Great. Hi, everybody. Very good to be here. So I'm the Chief Legal Officer at CDC Group. We're the UK's development finance institution. And although you see me sitting in London, we have a presence in Addis Ababa, Cairo, Nairobi, Lagos, and Johannesburg. So we're all over the continent. So what do? Well, we invest in private sector businesses in both Africa and South Asia. Almost 1,200 companies to date, employing some 800,000 people. We support those companies by providing equity, debt, or mezz finance. And we can invest in those companies directly or indirectly through private equity or private credit funds. So what are we looking for? We're looking for relationships with private companies that can deliver impact and help us achieve the Sustainable Development Goals. In other words, we're looking for our capital to be doing some good. And of course, we're also looking for a financial return. So it has been a difficult 6, 7, 8 months. When the pandemic started, we had to sit down to do some very hard thinking. And we had to develop an approach to how we'd respond to the challenges we knew would be ahead of us. And so we have an approach which can be boiled down, can be summarized very simply into 3 pillars. The first pillar is a preservation pillar. The second pillar is a strengthening pillar. And the third pillar is a rebuilding pillar. So what does that mean? Well, the first pillar focuses on the preservation of value. We've targeted our existing portfolio companies, projects and funds. We've reserved about $200 million to support those businesses in difficulties. And those businesses, folks with whom we have a relationship, have been drawn down with that capital over time. Pillar 2 focuses on addressing systemic liquidity issues as we saw foreign capital withdrawing from our markets. We wanted to find a way to provide liquidity to those businesses in certain sectors, particularly healthcare and food and agribusiness. And so what we did is that we've entered into supply chain and trade finance agreements with financial institutions that are active in those markets. And to date, we've closed on 275 million worth of transactions, and I think we have approval for 435 at the moment, and hopefully more by year end. And we're partnering with the likes of ABSA, Societe Generale, and Standard Chartered. The final pillar is not so much about the now, but it's building for the future. And we're hard at work, very much like the other folks on this, but we're very hard at work developing a pipeline of investment opportunities that will allow us to partner with those businesses in countries as they're recovering from the pandemic. Our priority sectors, well, healthcare, of course, food and agriculture, energy, and people often forget financial institutions, but financial institutions that will provide support to small and medium-sized enterprises. So that's how we have been reacting. 3 pillars, and we have a lot of people hard at work on that, on building and maintaining each pillar. Thank you.
Thank you, Mark, and to all our panelists for those responses. If we perhaps move on now to the second question, and this really focuses on the theme of collaboration. I think it'd be very interesting for our audience to hear on how financial institutions are perhaps coordinating their efforts, perhaps to the increased demands for capital or non-financial resources during the pandemic. And perhaps for that question, I'll turn over to Samali first.
Thank you for that. Yes, collaboration, coordination have been very important during this period. I think globally, I think this pandemic has shown the importance of cooperation. And within the context of Africa, I think this is even more so, because as I mentioned before, it's a continent that, because of history, is more fragmented than the other continents. And what this pandemic has laid bare is, I guess, the absence of integrated supply chains within the continent, the lack of manufacturing and the reliance on external supply chains. And so when thinking about collaboration and coordination, from our perspective, it was more than just a question of providing structuring or financing. We needed to look broader. We need to look at policy. We needed to look at logistics. And so some of the partnerships we have built, in a way quite unique, in order to address both the economic and the human cost of this pandemic. And one of the partnerships that I'd like to discuss is one that we formed together with the African Union, the United Nations Economic Commission for Africa, the Africa CDC, Center for Disease Control. And that was really around establishing an African medical supply platform. And the idea was, how do we facilitate both the manufacture and the importation of critical PPE and COVID-related supplies? And we work with both the private sector and governments in order to get this platform up and running. And the idea is, as a bank, while we were involved, was that people can go onto the platform either as a supplier or as a potential manufacturer or as a purchaser. And as an institution, we were looking towards helping sovereigns in particular fund PPE supplies that they needed, but also to help manufacturers build up capacity. And that's an issue around looking at where we are now, we need that capacity now, but also looking towards the future to ensure that going forward, the continent is not in another situation where it's left in a position where it's really struggling to get the equipment that it needs. And the interesting thing about this platform, it was born in Africa, structured in Africa, and it's been quite popular in terms of easing, I guess, the strain around getting PPE and also providing critical funding for these industries that are creating it in Africa. And it's actually been taken up by the states in the Caribbean, who looked at the platform and are actually beginning to participate in it as well. And again, it shows you this power of international cooperation and international collaboration, which we probably should have been doing before, but in a way, this pandemic has really brought the continent together. And before I end, I'd be remiss not to mention the African Continental Free Trade Agreement, which was meant to come into force this year, but will actually be up and running early 2021. And the way both the private sector and governments and DFIs and other institutions have come together have really shown the benefits that such a continental free trade area would potentially have in terms of having a coordinated approach and policy. Thank you.
And thank you very much for such a detailed and encouraging response. Perhaps if I hand over to Mark, also the same question.
Yeah, well, that was one of the things that I was reflecting on here is the some of the collaborations which we find ourselves now having. And we're partnering with folks that perhaps we wouldn't have been with 5 or 6 or 7 years ago. And I think we're seeing much greater levels of collaboration with some different partners than perhaps ones we've had in the past. An example of that, following on from what we just heard, was we have a portfolio company called MedAccess. And MedAccess is a company that very recently entered into a relationship or provided a volume guarantee to UNICEF, who we all know. And as a result of that, we're hoping that diagnostic tests, oxygen supplies, and infection protective equipment will be able to get into lower income countries in Africa with greater ease than it has to date. So those are sort of partnerships were not the ones we were having some years ago, but we're having them now. And the pandemic is driving those sort of behaviors and those sort of conversations. I have a sense that we're not all fitting in the boxes we were some years ago. There's a much greater appetite and willingness to cooperate and collaborate. I think what I wanted to comment on was the DFI world, development finance institution world, particularly when viewed from Europe. You have a number of different development finance institutions in Europe, as you know. We call them the DFIs, and we talk to each other very, very regularly. I think at the moment, at the last count, there are 9 or 10 working groups at the moment working at these DFIs, working on pandemic-related issues. And just to give you an example of the areas of cooperation that are being looked at the moment, for example, looking at ways of funding access to energy in some of the countries we care about, looking at ways to finance SMEs better and faster as a result of the pandemic, practical issues about when so many of us have co-lent, how do we deal with stressed debt portfolios? How could we or could we provide credit to fund managers to support their portfolio companies, and some interesting ideas around that. So there are working groups, there is an overriding task force focused on this. So a lot of people are talking to one another, and slowly but surely, one other very important thing, we haven't touched on this yet, and when we're talking about doing new deals, one of the trickiest things at the moment is our ability to do due diligence. In a world where you can't get on planes, you can't kick tires, you can't visit facilities and meet management physically, how do you do that? Well, I think what we're going to see is a much greater willingness to cooperate with one another, use each other's talent, use each other's offices. And there's a lot of work going on about how we share resources, we share intelligence, and we do due diligence together, helping each other out. And again, that's something that we tended to operate in silos some years ago. And I think the pandemic is breaking that down. And I think the consequences of that are going to be long-term. I think we're going to see more, once the talking stops and we're into execution and implementation, hopefully this is going to drive better ways of doing things in future and greater efficiency.
That's a great segue actually to our next question, which we wanted to talk about risk management and precisely those challenges of due diligence and assessing projects and monitoring them during this time. So maybe I could pass that question to Kevin and to Kimberly to see how your organizations have been dealing with this during the pandemic. Maybe Kevin, you can kick that off. Thanks.
Yeah, just echoing on what Mark said, we've really taken a new look at how we operate and by necessity, how do we think about due diligence in this era where the planes are grounded and we can't travel, the teams can't travel. And so it is a combination of virtual due diligence and finding that we can do a lot of our review remotely. And it's also, to the theme of the last question, more partnering with our colleague DFIs, where they have experience, where they have information. They may have previously been involved with a company that we are looking at. And so we will pick up the phone and work with them to understand, what did they do in their full review, and were there any flags? And if we're co-lending into a project together, obviously looking at the best ways to share the burden of diligence and how that can be most efficiently done. So it really, I think, has provided, there are always opportunities, as was mentioned earlier, in a crisis. And I think this has provided us an opportunity to figure out ways to work better together that will serve us, obviously, going forward beyond the pandemic.
Thank you. And Kimberly, you had touched also on issues of, I think, capacity and also sort of support to the companies that you are working with. That would be interesting to hear a little bit more about that as well.
Absolutely. So as we are really basically an investment fund, an equity investment fund, we have taken the opportunity, I guess, of the slight slowdown in our ability to originate and execute deals to really focus on our portfolio. That's certainly not to say that we're not still originating and we're not still moving towards execution. However, on our project development side, so much of that work does depend on making sure that we have the attention of the appropriate people within countries, within governments, in many instances. And frankly, many of them are pretty distracted right now. They are focused on making sure that their populations are healthy and have food to eat. And frankly, that is of a higher priority than pretty much any project that we have. So we understand that and are incredibly sympathetic to that. So we are continuing to work on the origination, the development side of things, but doing so with respect to the work that we can do, sort of the desk work that we can do. In terms of execution, we have also seen that slow down a little bit because we don't go into deals all by ourselves. We always go in with other equity players, and almost always with debt. And people aren't generally quite ready to actually make the money move right now. People tend to want to see what is happening next. So my prediction is that everything has lined up, is lining up so nicely in a way that once the sort of a lockdown environment has ended, there will be a tremendous amount of activity because things will just start falling like dominoes in a positive way. But in the meantime, as I said, we are continuing to work on that origination and work on that execution, but we are really focusing with our sponsors on how to address the risks that they are encountering right now. Everything from, as people have said, supply chains to cash flows, to the issue of commodity prices that have a significant impact, to the issue of repatriation of currency and how do you get hard currency out of a country, and really working with all of our projects to mitigate those risks as much as possible and to address them when they can't be mitigated directly. So working on doing some restructuring of projects if that is necessary, helping them to find other sources of financing if that is necessary to add liquidity. So we are really working as an equity holder, but a really significant, strong partner with these projects, with these private sector investors, because our goal is always to create an environment where the private sector wants to invest more in infrastructure in Africa. And as someone mentioned, the capital flight out of Africa over the last several months has been pretty extraordinary. And we want to make sure that those who are in Africa will continue to want to come to Africa and will be able to be used as an example for other investors who will come in the future, that they can survive a really difficult situation and come out on the other side. And we think we're very helpful in providing them with the support, the knowledge, as I said before, the networks to be able to do that. I mean, we are, in essence, a deal shop. Everybody at Africa 50 has done deals in the private sector and at DFIs for our entire careers. And so that's really what we are focusing on. Certainly we do some policy things as well, but at the end of the day, we're a relatively small institution that focuses on infrastructure in Africa. So we are quite focused in what we do. And we are focusing on what we do best, and that is helping projects be able to reach completion and provide the infrastructure support that Africa needs.
Thank you. Turning more to sort of the post-COVID world, if we can imagine it, and thinking about rebuilding. And Mark had set out a very interesting framework of 3 pillars. And if we think about the 3rd pillar in terms of rebuilding, reconstruction, creating more resilient markets, and sort of in the medium to long term, without really knowing kind of when that will start. And I'd like to open this question to the entire panel. Sort of, how are your organizations thinking about the medium to long term and your engagements in Africa? And maybe Mark, you can kick it off since you had given this nice rubric.
Well, look, we invest in Africa. We're there by mandate. We've been investing in African businesses since the late 1940s. So we try to invest through cycles. And one of the, as I alluded to previously, we are very keen in the sectors at the moment that are directly relevant to the pandemic. I touched on healthcare, I touched on food, I touched on agriculture, etc. But we'll invest across the board. We really feel that there's a place for significant investment in energy infrastructure. There's a clear need for that. We believe there's a need for investment in telecommunications. We noticed with one of the consequences of the pandemic is an extraordinary surge in demand for data, an extraordinary surge in the demand for broadband. And a number of our portfolio funds, we noticed, have invested quite significantly in data centers, onshore African data centers, which in the long run is going to will lead to, I hope, again, greater efficiencies, greater pricing, greater services for folks living in the relevant countries, and hopefully better pricing. So that's an area we see. But coming out of all that, again, it's the staples that we've always been committed to investing in, including manufacturing's extremely important as well. And I will again emphasize financial institutions. Financial institutions have an extraordinarily important role to play in rebuilding and getting countries back into a steady state again. And if we can nudge them in a way that they're not forgetting the all-important small and medium-sized enterprises, that's very important to us.
And Samali, you had also touched on this in terms of the things that your organization has been doing now that will serve for the future and for potential shocks as well. Maybe you can give some remarks on this.
Sure, absolutely. And one thing I would like to mention is that even though we, as you know, all institutions have been addressing COVID specifically, as an institution, we haven't stopped, I guess, our normal line of business in the sense that there are still companies that need support that had great projects before COVID came along. And we have done our utmost to, I guess, adapt so that we can continue to support them into the future. And I think from our perspective, it's a case of looking at, well, structurally, how do we continue to facilitate development? And so a lot of the things that we were doing in the past, we've almost been re-energized in terms of doing. I mentioned the African Continental Free Trade Agreement, which will be absolutely critical because again, as an institution, we see trade as a means of facilitating development. And we believe that that treaty will really open up the doors in terms of facilitating intra-Africa trade, which is very much needed. The other structural things that we're trying to deal with, again, looking towards the future, is on the theme of intra-Africa trade. You have the treaty, how do you get people to use it? And one of the things we found is that a lot of businesses across the continent don't know what their counterparts in different African countries are buying or selling or producing, etc. And so one of a feature of what we're doing at the moment is to try and really create data and information sources for people to do that. And yes, we're a DFI. Do DFIs generally tend to do this? Perhaps not, but we take quite a holistic approach to development. And one of the things that is in the calendar for 2021 is an intra-Africa trade fair. And the whole idea behind that is to bring the continent to one country, host a big trade fair so that people can actually see what's produced in the continent so that they can begin trading with each other. Because in some of the research we did, actually with some UN agencies, we found that, for example, people so traders were getting raw hides from India when they're actually readily available in Kenya. Again, just because these haven't been explored. And I think the other thing that we are very much focused on is, and it was mentioned by Mark, manufacturing and export development. So in terms of the new projects that we are reviewing, those are the ones that are taking priority, particularly in the medical supply chain, but also in agriculture, also in commodity processing. Again, trying to build a solid foundation for a more prosperous future.
Thank you. I'd like to invite Kevin to contribute as well.
Yeah, thank you. Just to hit and echo on a couple of points that both Mark and Sumley made. First, the importance of financial institutions. We really think that is, it has been a focus for us, but certainly in the COVID world and post-COVID, right, a very efficient way to get money to SMEs that need it is on lending to financial institutions. And so we have found that to be very effective. You know, again, I'll kind of end where I started, that we have prioritized Africa and will continue to do so. And I think it's not a kind of radical shift in terms of what we were doing versus what we're going to do now. It's just expanding and redoubling our efforts in those sectors. So, right, we have folks on the ground now for the first time, full time on the continent. We've created a food security unit, dedicated team at DFC to work on those issues. We're focused much more on the healthcare space. Our CEO, Adam Bowler, comes from a healthcare background. This is very personal passion for him. And so that obviously, right now, dealing with COVID and the response to COVID, but that will continue in the healthcare infrastructure that we are able to participate in and help develop. For example, I mentioned the two small equity deals, right? Those are e-commerce platforms that are helping serve women in rural populations through e-commerce to get their healthcare needs addressed, right? That will continue on and pay dividends well beyond COVID. And then on the point of, you know, data and infrastructure, I think that obviously has been a focus for us, but we see even more the need now for ICT and e-commerce, e-finance platforms, and then the transportation and energy infrastructure. Again, we're continuing to double down on those areas and look forward to working on these projects. As somebody else mentioned, we haven't stopped doing our projects that were in the pipeline. We've continued to focus on those, and our numbers are only going up. So everybody is working doubly hard to continue doing what we were doing before COVID, and now on top of that, doing everything we can to respond immediately to the best of our ability.
Thank you, Kevin. And Kimberly, as an equity investor looking at the medium to longer term, sort of what are you guys seeing as a sort of post-COVID focus?
Well, we have been thinking about it really in terms of 4 strategic shifts, and they're not shifts so much in terms of these are areas that we never thought about before, but that we have now determined that we need to focus more of our energy on. And they're healthcare and social infrastructure, ICT, decentralized infrastructure, and then asset recycling. So just to start with decentralized infrastructure, it's something that I think everybody has been interested in for a while, the mini grids, the micro grids, the off grid, that kind of thing, which everybody wants to see happen. It makes sense. Not having to have transmission for electricity, for power, is incredibly important. You in a way, the way that Africa leapfrogged much of the developed world in terms of mobile phone technology. We think that Africa could leapfrog to create these off-grid decentralized infrastructures, given how important it has become in the COVID environment to have communities be as self-sufficient as possible. This is an area where we really do want to focus even more strongly moving forward. With respect to healthcare and social infrastructure, obviously, it is something that is vital, that we must start focusing on, even more so than we have before. The difficulty is, of course, that Africa 50 is a commercial DFI. Our investors expect returns. And unfortunately, the way that you usually think about the healthcare sector is the profitable deals aren't so developmental, and the highly developmental deals don't tend to be so profitable, which makes things pretty difficult for a DFI that is very commercially focused. However, as others have mentioned, we are looking more closely at manufacturing opportunities and other opportunities in healthcare, water, and sanitation that we think will be able to both be developmental, because that's a very important part of our mandate, as well as profitable for our shareholders. It's not easy. It's something that I used to be at OPIC as well, and it's something that I know at OPIC we worked hard to do, but they're challenging deals to do always, but it's something that we are determined as an institution to do. A lot of people have mentioned ICT, telecoms. It's been a strategic priority sector for us from the very beginning. We always have believed, and we continue to believe, it has the largest potential for growth and investment after the crisis. We really think that this is a sector that can take off and should take off. As we know, ICT has already been a major success story in Africa. In a 30-year period of time, the continent went from very limited phone service to over 500 million mobile subscribers, including developing very innovative applications such as mobile money from within the continent. And it's crucial for Africa's continued long-term sustainable growth. So just a couple of statistics that I always find interesting. An additional 10% internet penetration in developing countries raises GDP from between 1% and 4%. So just 10% has that kind of impact. And African firms that are using the internet are nearly 4 times as productive per employee as those that do not. So that just sort of illustrates the importance of having that ICT throughout the continent. And as we know right now, central banks are encouraging mobile money, banking, and other digital payment systems. Everybody wants to do contactless payment. And governments are using more and more social networks to spread information about the virus and answer questions. And there are countries from South Africa to Nigeria that are developing self-assessment apps. So all of these things just indicate to us, and I think everybody, that ICT is a place that can have a significant impact on how we function moving forward. So one of the things that we are doing among our typical things is we have something called an innovation challenge, which was a challenge that went out globally to connect to last mile internet connectivity solution. We got about 700 proposals, and 85 of those were from African entities. They're really interesting. The results, the winning solutions, are going to be announced in November at AFRICOM. And then we're going to roll out the winning solutions in Rwanda as quickly as possible. And then just very quickly, the final thing that we're really working on is something that we find very exciting, which is asset recycling. It's sort of privatization by a different name. but it is asset recycling. And so what it is basically going in and taking assets that are infrastructure assets that are government owned and helping them to privatize them in some ways, freeing up capital for them to then reinvest in other types of infrastructure projects that the private sector might not be as willing or able to invest in. So those are the 4 areas that we're really focused on and we're pursuing, and we think will really bode well in a post-COVID environment.
Thank you very much. And I think it's a great note to end on, sort of the idea of innovation and generating new ideas coming out of this. I'm going to pass it on to Nikhil, who's going to advise us on how we are on time and where and if we need to.
Thank you. And thank you, Dana, for co-moderating the session with me. We are in fact at time. It's been a fascinating discussion. I'd like to thank all of our esteemed panelists, Kevin, Mark, Kimberly and Samali, for your input on what was a fascinating session. Just a bit of housekeeping for those that are obtaining CLE credit. I've been advised that the code for today's session, if you are eligible, is KS-CLE 20-167. But again, I'd like to thank everyone. I think it was a really fascinating discussion. It's clearly a grave ongoing situation with the pandemic and the wider overlapping crises facing Africa, but hearing from our panelists on themes of collaboration, this increased counter-cyclical support at the time when it's most needed, and redoubling of efforts, I think is just really encouraging to hear. And if everyone would take me up on the opportunity, it'd be great to convene in maybe 12 months time and redo this panel and share share our stories since for those 12 months. But with that, I will close the session and thank you again to our audience. We have got some questions we're working through and we will endeavour to respond separately to those that have asked questions. Thank you.